Hey, VA borrowers, my name is Steve Doherty. I'm the Raleigh VA loan guy. I'm a loan officer here in Raleigh, North Carolina, and a United States Marine Corps veteran. So maybe you are thinking about purchasing a home as you're exiting the military or retiring from the military. You can't start this process too soon. There are no penalties for getting to work early. But today I want to talk to you about timing. What's the best time to do it? What are the consequences of waiting too long, and what are your options? Let's get into it. So first, let's talk about the scenario when you're just getting out of the military. You're not eligible for retirement. You're just moving on. Once your LES says that you are within 1 year of EASing or ETSing, right? 1 year of getting out, then by VA lending rules, a lender is no longer able to use your military pay. So that's your base pay, BAS, BAH, jump pay, hazard pay, dive pay, all that kind of special duty pay, language proficiencies. None of that stuff is now eligible for qualifying income. Now, if you're re-enlisting, we can document that, and that's not a problem. But if you are actually getting out and you only have 1 year left on your orders, that could be a problem. It doesn't mean that you can't qualify for a mortgage. Maybe you have other sources of income. Maybe your spouse works. But what it does mean is it's going to be very difficult to utilize your military pay as qualifying income to go towards qualifying for a monthly mortgage payment. So keep an eye on that LES and look for when your date is. Now, if you apply with a less scrupulous mortgage bank, maybe a big online lender, they probably won't check that LES date, but their underwriters almost certainly will. They are actually required to. So if you get a pre-approval and you have 6 months left on your contract, be very careful. It doesn't mean you're in the clear yet. What it does mean is whoever did your pre-approval didn't really do a full in-depth analysis. They just took whatever income that you represented you have, and then they went with it. Be very, very careful if you're within that 1 year time frame. So let's say you're getting out of the military and you have 13 months left. Does that mean you're totally in the clear? Well, it kind of depends. It depends on where you're purchasing that home. If you're purchasing the home far away from where you're stationed, that could present a problem as well. Why are you buying a primary residence away from your duty station? Now, the VA is very flexible in terms of the locality of a home in relation to your place of occupation, but that doesn't mean that there are absolutely no rules. So again, be very careful. So again, does this mean that you cannot qualify for a VA loan if you are within 12 months of getting out? Not necessarily. If you have a valid offer of employment, then a mortgage lender could use that. For instance, if you're getting out in 90 days and you already have a fully executed employment agreement with any contingencies removed, right? There's nothing that says that the offer is dependent on you passing a drug test or passing a background test. Then generally speaking, we can use that income. And the VA is pretty flexible with this in terms of how long until you actually start that job. Another way, and this is maybe more difficult to establish, is that if there are other strong underwriting factors, what does that mean? Other strong underwriting factors, we may be able to still use that military base pay. This is very hard to do, right? We may be actually leaning on spousal income or other likely income, but you definitely don't want to bet the farm on being able to use this. If this is the case and a lender says, yep, we can use your income even though you're about to get out of the military, push them back a little bit. Say, are you sure we're able to use this? I'm getting out within a year. If they don't have a good explanation for why, then you may want to look elsewhere. So for those of you who have a pending retirement, first of all, congratulations. Thank you for sticking it out for 20 years. I only did 4 years active duty. But a similar situation presents itself in which timing is everything. Once you're within 1 year of retirement, you most certainly will lose your military income in terms of it being eligible for qualifying income. So your BAH, BAS, base pay, jump pay, hazard pay, special duty pay, language proficiencies, all this compensation that you receive from the military, within that 1 year mark, we may not be able to use it anymore. Now, it doesn't mean you have no qualifying income. if you're going to have a pension and we can document that, you're going to get you rate retirement, then we can use that income. But it will most likely be a fraction of the income that we could use compared to your overall military pay. Keep in mind, compensation like BAS and BAH is not taxed. So we can gross that up. Meaning if you get $1,000 a month in BAH, it gets entered in the file as $1,250. So once you cross that 1 year threshold, your qualifying income may be reduced significantly even with that retirement pay. What does that translate into? Again, it doesn't mean you can't get a VA loan. It just means that your budget may be a lot less because your debt to income ratio will be higher. Now, there's also VA disability pay, but for most of you, the earliest you'll be able to get you'll be even able to apply for a disability rating from the VA is 180 days before your retirement date. So within 180 days, let's say you have your VA physical, you probably won't get the rating immediately. It could take at least a couple of weeks to get the rating. Once we have the rating, we can use VA disability pay as qualifying income. Keep in mind that for most of you, if you wait to be within 90 days of retiring, you will have to wait till you're actually out to complete that VA physical. And that without that VA physical, you will not have a disability rating and you will not have any disability pay. So taking a couple steps back, what if you're 13 months out? As long as we're going to close before 12 months from retirement, then we can use all that military pay. Now, maybe you've done your due diligence, you're way out ahead of things, and you've been networking and you think you'll have a job lined up and you're not really that concerned about a big mortgage payment. That's different than actually having that income that we can use. So if you're at month 11 and you don't have employment lined up yet, even if the odds of your employment are 99%, that's not income that we can use to get you qualified. Now, once you do have an employment agreement lined up, contingency is removed, right? It's not subject to a drug test or a background check. Then we can use that income, right? And maybe now we're starting to build up closer to what your income level was before the 1 year mark, right? But maybe we can use pending retirement pay, pending employment pay, right? Post-military employment pay, and VA disability pay. But keep in mind, there are a lot of factors there to be able to use it. So whether you are just exiting the military, right, after 4 or 8 years or however much time you did, or you are retiring, you want to think critically about timing and how it may be in your best interest to start making those moves a year in advance. Now, that doesn't work for everyone. I understand that. 14 months is a long time to purchase a home, but you want to be mindful that if you've gotten pre-approved 18 months before retirement and you expect to buy a house under the same exact qualifying conditions 9 months before your retirement, you might be in for some pain. Again, my name is Steve Doherty. I'm the Raleigh VA Loan Guy. I really appreciate you watching this video. Please subscribe to my channel to watch more videos. Leave a comment below. If you have any questions about any of this, please feel free to reach out to me via email, text message, phone call, Red Star Cluster. I look forward to hearing from you.